and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 30th of November 2023 and here are the questions we will be answering today. Why is Dubai COP28 important? Altman and OpenAI. What is the role of the board? BSE Midcap at $4 trillion. Will the optimism last? And what is rat hole mining? A host of world leaders will meet and brainstorm ways to limit global temperature rise during the 12-day COP28 summit, which begins today on November 30th in Dubai. They will also assess the progress made towards the Paris Climate Change Agreement, which had sought to limit global warming to below 1.5 degrees from pre-industrial levels. In our first segment, Ayush Mishra and Abhijit Kumar track the journey of this annual event and also tell what can we expect from this year's event.
The COP28, an important United Nations climate summit, is being held in Dubai between November 30th and December 12th. COP, which stands for Conference of the Parties, is an annual meeting where 196 countries come together to discuss and negotiate global climate policy. At the COP28 conference, government representatives will report to their country's progress on climate change policies, set intermediate goals, and make agreements to share scientific and technological advances towards global benefit. Experts believe that COP28 will aim to fill gaps in climate action and establish a climate damage fund. The summit will be the first formal assessment of the country's progress towards the 2015 Paris Accords target to limit global temperature rises to 1.5 degrees Celsius and to keep them well below 2.0 degrees Celsius above pre-industrial times. Let's first take a brief look at the history of the COP summits and their achievements over the years. The first COP summit was held in Berlin, Germany in 1995. In the third meeting in Kyoto, Japan in 1997, the Kyoto Protocol was adopted with a specific focus on reduction of greenhouse emissions and emission trading. The COP8, which was held in New Delhi in 2002, the Delhi Ministerial Declaration was adopted. It called for efforts by developed countries to transfer technology to minimize impact of climate change in developing countries. However, it was during the COP21 in Paris in 2015 which provided a watershed moment in the global effort against climate change. The adoption of the Paris Accords to govern climate change reduction measures from 2020 and to curb emissions to reach net zero by the middle of the 21st century was a key outcome. The COP26 summit in Glasgow, UK in 2021 saw the countries agreeing on the development of the Accelerating to Zero Coalition to accelerate the phasing out of fossil fuel vehicles and the Glasgow Climate Pact to phase down the use of coal-fired power stations. Subsequently, during the COP27 held in Egypt in 2022, there was an agreement on loss and damage, under which rich countries could compensate poor countries for damage caused by climate change. The 2015 Paris Agreement required each member nation to prepare, communicate, and maintain successive nationally determined contributions that it intends to achieve. However, since the Paris Agreement, there have been shortfalls in achieving the goals set out in the agreement. Many countries have not met their targets and global emissions continue to rise. So, what have we achieved so far?
So, we are not really even close to all three pillars in terms of mitigation, adaptation, and loss and damage. And what is critical among all these is provision of finance, which rich countries have failed to provide. So while we have talked about several targets and countries have submitted their climate action plans or what we call NDCs, but the reality is that the recent reports, emission gap report, production gap report, as well as adaptation gap report, clearly indicate that we are nowhere near the target that we had to achieve to stay below 1.5 degree temperature rise. So the recent report said that, in fact, we are going to be producing double the amount of fossil fuels in 2030 than what would be consistent with the long-term temperature goal of the Paris Agreement. At the same time, there is a huge adaptation gap. As the recent report said, that the gap is to the tune of 10 to 18 times of what is being made available right now, and the need is far, far greater. And if we do not support communities to adapt, we are going to see much more loss and damage that will arise from increasing climate impact.
The emissions gap report published recently by the United Nations Environment Programme reveals that the current pledges under the Paris Agreement still put the world on track for a 2.5 to 2.9 degrees Celsius temperature rise above pre-industrial levels in this century, as against the goal of 1.5 degrees Celsius. G20 nations, notably China, the US and the EU, are responsible for nearly 80% of the cumulative fossil and CO2 emissions. The US accounts for 4% of the current world population, but contributed 17% of global warming from 1850 to 2021, including the impact of methane and nitrous oxide emissions. India, which accounts for 18% of the world population, but till date has only contributed 5% of warming. So, experts believe that one of the issues that COP28 may face is the choice of Sultan Ahmed Al Jaber to lead the summit. He heads the United Arab Emirates State Oil Company, and his appointment has been controversial. Another important issue that will be discussed at length is the implementation of the much-awaited Loss and Damage Fund. The fund was designed to help vulnerable countries cope with the impacts of climate change. So, in the light of this, what are the expectations from this summit?
All COPs, that is Conference of Parties, are very political events. Right? There are lots of interests being at stake. And while we have to try and address the climate crisis, every country is invariably looking out for its own interests. But I think the key is to find the common ground across all of these interests. And the argument that we should not only focus on coal, even though it is the most fuel for sure, but why should we penalize countries who have more coal than they have oil, like India? We have to use the fuel that we have. Should the discussion only be on coal, which is the most polluting fuel, or should it be on all fossil fuels such as coal, oil, and gas? I think this will be a very big issue. Another issue that I just want to flag is that this is a COP where they will take much more seriously discussion of adaptation. How do you adapt to climate change? That's going to be extremely important. And the last issue is all of this costs money. What progress can the COP make on figuring out where that money comes from? How much will be public money? How much will be private money? How can private money be induced to invest in developing countries?
Dubai COP28 is an important United Nations climate summit that aims to find and fill gaps in climate action and establish a consensus on the Climate Damage Fund. However, the summit has to overcome the challenges and the general sentiment that COPs are failing to bring the world together to agree on ways to address the climate crisis.
Meanwhile, the temperature also soared in Silicon Valley recently after the OpenAI board sacked Sam Altman. Although Altman's reinstatement has taken some of the heat out of the drama, it has raised questions about the relation between company boards and CEOs. Business Standard's Suveen Sinha sat down with industry veterans Arun Maira and Amit Tandon to get clarity on this contentious subject.
Hello and welcome to this special segment of the Business Standard Morning Show. I have two very eminent panelists here with me. Let me first introduce Mr. Arun Maira, who was a member of the Planning Commission from 2009 to 2014, before which he was the chairman of BCG India. and he also spent about 25 years with the Tata Group in various capacities. My second guest today is Mr. Amit Tandon, and I'll be addressing him as Amit. Amit is the founder and managing director of the Institutional Investor Advisory Services India Limited. So, the topic we have today is the relationship and equation between company boards, CEOs, and founders. The trigger, of course, was the experience that OpenAI went through in the last few days when its founder, Sam Altman, was fired on a Friday, and by Tuesday night, he was reinstated. And on the other side of the coin, the board that had fired Sam found itself out in the doldrums. So, given this context, and given the fact that India is in a unique position where we have companies that are more than 100 years old and we have a thriving startup sector, in this evolving situation, what should be the role of boards across companies? How can they carry out their duties responsibly and in a manner that is accountable and transparent, while making sure that the founder or CEO, in some cases it will be the same person, they also conduct themselves in the manner that is expected of them? Let me start with Mr. Myra.
One of the early investors, Elon Musk and some others, have felt that we want to give money for good research, for something which will help humanity, but we want to make sure that it's done not for profit. You can have the money, but do it for this purpose. Now, when they needed more money to do their research, then you need to go to other investors. And so they created two vehicles, and this is, you can explain more, Amit can do that even better. There is now a company that is for profit, and then there's this overall supervisory board, as it will, who's to ensure that that profit-making company also doesn't cause harm to society. So in this dilemma, what does the board do? What does the board do?
Yes.
They are not required to, from what they were set up for, to comply only with the usual stock market and financial market expectations of responsibility. They have broader responsibilities to society. And there's a dilemma because fiduciary and as per the market's expectations, they should be just concentrating on enabling the management to get on with the big job of making more profits for the investors.
Yes, yes. Let me invite Amit to weigh in with his initial remarks. And Amit, if you could kindly also cover what should be the investor's approach to such a situation.
Thanks for inviting me for the show, and it's a pleasure to be and sharing the platform with Mr. Myra. I'll actually begin with the where Mr. Myra left off, which is kind of talking about a board which is for a board and an entity which is for profit and another entity which is a not for profit. And what strikes me in this whole thing is that we've had the Tatas who've been doing it for over 120 years. So you have the Tata Trusts, which have a motive which is quite different from that of some of the other companies, manufacturing companies and other businesses which are there, which are for profit. And in the positive sense, what the Tatas did was they kind of put in Tata Sons as the go in between. So Tata Sons was managing whatever the operating companies were doing. And the money which was then being collected by Tata Sons was being dividended off to the trusts, who then used it for their various altruistic motives. And I thought that was, to my mind, a pretty attractive and a pretty good structure. One of the things which is responsible for Sam Altman's firing has been the fact that the board. I must confess that the board has been reasonably vague in terms of why they sacked him.
Oh, very vague, very vague.
Style, or there were some other issues. So therefore, in the absence of clarity, they've kind of just said that look, there wasn't. They weren't really clear in terms of what he was saying and what he was doing, and maybe they felt there were some contradictions in terms of the companies need to balance the two. So it could be that, look, there's a product which was for the benefit of humanity. I put that in quotes. And then there's this commercial motivation. And so Sam Altman was trying to balance it. So, of course, one of the issues is in the absence of knowing why they sacked him? What happened? It wasn't something which was clearly articulated. And there was a belief that, Sam Altman had defined the course the company would take, what the future direction was. There were certain contradictions, no doubt, which the board saw. And the view was that, look, maybe the view was they will get balanced and addressed along the way. And that could be one of the things which they're expecting that the new board will do, which is balance these contradictions between the profit motive and the need for more and more capital to invest in R&D with that of the do no harm motivation which the company started with.
Yes. In fact, what we do know is that the board accused Altman of not communicating enough with the board about where the company was going.
So we were hitting the nail on the head.
Right.
Yeah. Okay. How much should an investor's rights prevail because the
Yes.
investor put large amount of money with respect to the needs of other stakeholders who are putting no money in the company? I'm talking about the public at large. So
Yes.
use example, and I'm glad that Amit brought up Tata's. Stock markets wouldn't care probably whether Tata Sons is spending more money on CSR or less money. In fact, the history is that when Tata Steel, the largest company of Tata's, became, borrowing money abroad and getting investors from abroad, became an international
Yes.
steel company with international stakeholders as well as some international employees also. The
Yes.
experience that the CEOs of Tata Steel had in responding to the quarterly calls of investors from Wall Street is something worth noting. Because in the first time that the new CEO, that was Muthuraman, after the 2000 started, went on to a quarterly call, a young analyst sitting in New York in Wall Street on behalf of the analysts, Tata Steel used to have this slogan. It's a good advertising slogan to get the confidence of the public in India and society that, and we also make steel. And this young analyst, and Mr. Muthuraman's first quarterly call, where he's not experienced this, the sharpness, the financial sharpness and focus of a financial analyst, he says, Mr. Muthuraman, when is Tata Steel or Tisco going to stop being a socialist company and be a genuine capitalist one?
Yeah.
So Muthuraman, I was then a consultant with the BCG, and he was my friend from before. So he says, you've been to invest.
Were you present in this meeting when the analyst?
No. He, after that, because I had just come back from America where I was a consultant for 10 years too. So I was familiar with, how investors would be expecting a CEO. So it's like a coach, like he turned to me, he says, you please explain to me. You've grown up with the Tata values, and you also know how markets operate and what is expected of a CEO. I was given this question, what do I do?
What was your advice?
No, I
what
said,
was your advice?
Muthuraman, you can't change it by yourself unless the markets generally change their expectations of what they want from the companies in which they invest. It's the governance rules legally that will have to be reformed.
Talking about social welfare and other things that Tata Steel used to, pat itself on the back for, I have heard a lot of CEOs and business promoters tell me that my job is to make money, make profits, so that all our stakeholders, direct as well as indirect, benefit from the company. Now, additionally, if I want to do some social welfare, that is separate. But my primary job is to run the company well. Amit, what is your view on this?
Yeah, so look, if you think about it, for a long time, the whole thought process was that the business of business is business.
Yes.
And it was kind of very narrowly defined as, profit maximization and maximization for the benefit of shareholders. Now, I'd like to believe that it was a misreading of Friedman, because what Friedman has actually argued in the op-ed column through which this whole thing gained currency was the fact that, look, after taking into account the interests of all the other stakeholders, and this is something which has kind of got clarified over the years. So if you look at our Companies Act of 2013, they said the board needs to look at what is in the interest of all stakeholders. They've been very clear. They've not said shareholders.
I think the crux of the matter, the ultimate question we are looking at here is, why does a company exist? in the context of society, public at large, given that in defining the purpose of a company and its attitude to society and social welfare, what should be the role of the board, the role of regulators, and how can the government pitch in? Right?
Very
Mr.
good.
Myra, Amit, it has been very rewarding. Like I said, absolute pleasure. Thank you both for your time and interest in this. I think we should do this again soon. Thank you very much.
Absolutely.
Thank you, Amit. A pleasure to be with you. Thank you.
Indeed, Indian industry too can draw lessons from the OpenAI saga. Moving on, the overall market capitalization of BSE listed shares topped the $4 trillion mark for the first time ever on Wednesday. This comes on the day the Nifty 50 index ended above the 20,000 mark after a gap of 2 months. The key question on investors' minds right now is, will the optimism last? Rex Cano spoke to market experts on the road ahead for the markets.
On 29th November, India joined the US, China, and Japan to command a market capitalization of $4 trillion for the first time ever. The historic feat came on the day the Nifty 50 reclaimed the 20,000 mark for the first time in over 2 months. The rally, which has been triggered by easing oil prices and bond yields, has lifted the Nifty 50 index 11% so far in 2023. The BSE Sensex index too has gained 10% during the period. The gains, in fact, have been stellar in the broader indices, where the Nifty Midcap 100 and Nifty Small Cap 100 have clocked gains of up to 44%. However, with euphoria comes caution. Investors are now wondering if this is a dead cat bounce or will the optimism genuinely last. According to Santosh Meena of Swastika Investment, the crossing of the psychological 20,000 mark and the market cap's ascent to $4 trillion signals the start of a fresh momentum. The markets, he believes, appear primed for a pre-election rally which may take the Nifty towards the 21,000 level soon. Technical analysts too concur with the school of thought and see more legs in the ongoing rally.
We are largely trading in sync with the global markets, especially the US. And in the last 4 weeks, it's just a mirror image is what has happened in the market. So we expect this positive tone to continue, considering the kind of clues that we have from the global trend, plus the additional buying across sectors. So barring banking, which was underperforming for the last few weeks, now it's the participation of banking has also improved the sentiments. So overall, we are eyeing means a new high, and that could be closer to, let's say, 20,400, 500 zone is something that it might test.
That said, while the current exuberance may continue in the near term, analysts advise investors to adopt a selective approach going forward as volatility is expected in the run-up to the state election results this weekend. Today, on 30th November, all eyes will be on Tata Technologies' listing after its IPO garnered a record number of applications. That apart, shares of Gandhar Oil Refinery and Fedbank Financial Services will also debut on the bourses today. However, there could be bouts of volatility as traders settle their monthly futures and options positions.
He's making plans for an early retirement. Business Standard.
After the markets, let us turn our gaze to another news which kept people glued to screens for 17 days. A group of rat hole miners rescued 41 workers stuck in an Uttarakashi tunnel on Tuesday night. In our explainer segment, Nandini Singh tells more about these miners. Let us listen in.
A mining technique that has been banned in India over safety concerns has proven instrumental in rescuing the 41 workers trapped inside a collapsed tunnel in Uttarakhand. The technique, dubbed rat hole mining, was used to dig through the final stretch of the fallen rocks and debris and reach the workers who were trapped in the collapsed tunnel in Uttarakhand for 17 days. Rat hole mining is a controversial and hazardous procedure in which miners in small groups go down narrow burrows to excavate small quantities of coal. The practice has been prevalent in the remote hill districts of Meghalaya, where illegal coal mines are operated. Small batches of miners often enter illegal or abandoned coal mines by digging extremely narrow tunnels searching for coal. Once the pits are dug, miners descend using ropes or bamboo ladders to reach the bottom of the tiny holes. The coal is then extracted manually using tools like pickaxes, shovels, and baskets. Rat hole mining was banned in 2014 by the National Green Tribunal. It ruled that the technique was dangerous and unscientific after a case was brought over the deaths of several rat hole miners, including some children. In 2018, 15 rat hole miners were trapped inside a flooded mine. Only 2 bodies could be recovered in the course of the rescue operation that lasted for more than 2 months. Another such accident took place in 2021 when 5 rat miners were trapped in a flooded mine. 3 bodies were found before rescue teams called off the operation after a month. The controversial practice was adopted in Uttarakhand after the auger machine failed to cut through the debris. A total of 12 experts were engaged in the rescue operations. Uttarakhand Secretary and Nodal Officer for Silkyara Rescue Operation, Neeraj Kerwal, had previously said that the men brought in were not rat hole miners but experts in the technique.
I will achieve. I will fly high. I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Interestingly, these rat hole miners did not charge money to rescue the 41 workers. Well, that is all for today. For more news, views and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.